I caught an absolute slappers on Nasdaq, and I'm about to show you exactly how I did it. But before I do so, let me show you guys the screenshot on here in 3, 2, 1. So you know that this ain't no joke thing. Now, let's get into it. Why was I actually bullish on Nasdaq? So first things first, from a fundamental perspective, I understood that the job market in the US was pretty damn strong. Even though, again, I am aware that, the interest rates are relatively high at the moment. However, usually that would lead to unemployment starting to increase, starting to go higher, right? But for some reason right now, we haven't been doing so. So because the job market is still strong, that means that people have still got money to spend because they've got jobs, they've got income coming in. And if you've got income coming in, that means you're going to spend more money, because one person's spending is another person's income, or another business's income. Businesses are actually doing well. So earnings reports are coming out higher. People are spending money. Things are good. So if people are spending money, with businesses, what is the Nasdaq? The Nasdaq is a basket of the top 100 tech stocks in America. So if people have got money, people are going to spend more money with these companies. Hence why we've been going higher. These things are actually designed to go higher as well, because there are companies in there that are doing well, right? Now, usually, if a company is not doing well that's in the Nasdaq, they simply just take it out and add it with a company that is doing well. So these things are designed to go up over time. So now that I knew that this thing was bullish on a higher time frame, what I could then do is start looking for opportunities to buy. Now, what does that look like? That would be essentially seeing a bullish market cycle. And because I trade Wyckoff, that entails us seeing accumulation followed by reaccumulation followed by reaccumulation. And that's exactly what we were seeing. I could just very quickly label these up. We've got a reaccumulation over here. You've got a reaccumulation again over here. You've also got a reaccumulation again over here. Let's label that very quickly. And then obviously if I zoom in, maybe go on the 1 hour time frame, you can see we had we had the start of a reaccumulation up here. However, what I wanted to see was price actually start to come back into demand, i.e. the 50% and below, or the final reaccumulation that directly caused the high to get broken. And that's exactly where we came into. If I just zoom into where this box comes out to, you can see price literally just tapped into it. Let me move this out of the way a little bit so you can see the actual wick. So you can see the actual wick tapped into the last reaccumulation that directly caused this high to get broken. So now that we've seen price react from a buyer's area, I started to look at a bullish market cycle because, I wanted to see us potentially create another reaccumulation. So continuing the bullish market cycle, should I say. Now, up here, obviously we started that by obviously distributing. We'd obviously come down lower because the institutions need to sell to buy. They have to hedge themselves into their positions. So we saw the evidence of sellers coming in to potentially obviously see buyers coming in, which we did obviously see from price reacted from this gray box, right? Now on a lower time frame, because bearing in mind right now I'm on an intraday time frame, on a lower time frame, we actually started to see the bullish market cycle start to print. Because understand, when you see the market going up on a higher time frame, the market doesn't just go up in a straight line. So on a lower time frame, you would see, your bullish market cycle. Now, this is not high highs and high lows. I don't trade high highs and high lows. I trade Wyckoff. So these essentially just pretend that these are, reaccumulation schematics just for a moment, right? Because my heart's not that great. But because of the fact that I was starting to see we were going higher, and started to create a bullish market cycle on the lower time frame, which I'm about to show you, that's why I started having more comfort in potentially taking some entries if they presented, right? So now if I just come down to a lower time frame for a minute, we can start to see what price did when it reacted from that gray box. So in here we started to see what an accumulation, right? And an accumulation, you probably see it a lot better on a seconds time frame, but on a higher time frame, all an accumulation is sellers turning into buyers, right? And what that will look like is price making its way lower. You see some indecisive candles at the bottom, and obviously you start to see price make its way higher, also known as a drop base rally, which is obviously the drop base, which is obviously your consolidation, and obviously a rally where price goes higher, right? So now we start to see, okay, we've got an accumulation, but for me, a bullish market cycle is when we see an accumulation plus a reaccumulation. So when I started to see this up here where we sold to buy and obviously made our way higher, and we obviously shook out previous lows, hence why we see this here. I will get into why we actually need to see shakeouts in order for us to actually take these trades as well in a later video. We ended up reaccumulating, confirming obviously the reaccumulation by breaking this high. So again, when you're seeing sellers coming in to push the market lower, to then obviously see buyers come in and send it higher, well then that tells you that buyers are in control, because an area of sellers was obviously previously broken. Okay, so now we've seen obviously a reaccumulation. So I just obviously boxed this out, and then obviously I took the Fibonacci and I took it from, you know, from the low to the high. So what that then showed me was that obviously the 50% range, 50% being demand, i.e. where buyers previously were, where I should potentially start to see buyers come in again after they've mitigated. And mitigation just basically means coming back to retrace, if you will, or coming back to bring their previous losing positions up here to break even, right? Which is what happens down here. At that point, I wanted to see what took place on a lower time frame, because again, the market's a fractal. So this on a higher time frame would be this on a lower time frame than that. And then if we just looked at this upwards leg on a lower time frame, it would just be exactly the same thing, right? So with that being said, when we came into the 50%, i.e. demand, an area where buyers should potentially come in, if they are going to come in, then I wanted to see what price did down here. So as we came into the 50, now I was okay to come down to the seconds. So what we started to see when price came into the 50%, aka the demand zone, was that price started to print yet another bullish market cycle where we had an accumulation followed by a reaccumulation, right? Which is again showing me that buyers have intention in sending this thing higher. So obviously we saw that accumulation down here. Now again, this didn't actually meet, you know, my criteria, i.e. I wasn't comfortable taking it from this because it doesn't meet my strict set of rules that I have for an accumulation that I will take a buy out of. So I didn't take a buy out of this. However, after price accumulated, price then reaccumulated, and this was where I actually took my entry on, right? Now, bearing in mind we're on the 15 seconds, so me taking a buy straight from the 50% of this, trying to take this higher, was completely fine, because the risk to reward was actually a 1 to 14. Okay, so obviously the stop loss was pretty damn small, seeing as we're on a second, so I was happy to take this trade. Fun fact, actually, I was actually on a call with a student of mine, and when we actually saw this together, price had actually just broken this high. So price had broken this high, so we were on a call. I might have added to the end of this actually so you guys can see, but we actually broke this high, and then I set a buy limit after we broke the high, and then we finished on the call, and then obviously we ended up getting triggered into this on the buy limit, which was absolutely clean, might I just add, right? Look at how clean this entry was. Delicious. Now, obviously, at this point, my target was, because again, if I just step out to a higher time frame very quickly, we're in the middle of a potential higher time frame reaccumulation where we're seeing sellers push the market down so that buyers can come in and then obviously push price higher. So if we were going to continue being bullish, then I would have liked to see this high get taken up. So because of that, obviously my entry was all the way down here. I was happy to hold this trade up to these highs. Number one, because from a technical perspective, it made sense. And number two, fundamentals are backing me. Fundamentals are behind my trade idea, because the fundamentals are sending this thing higher. So I'm essentially just getting in, swimming with the current upstream, right? Which is obviously how we were able to catch this 1 to 14 risk to reward trade. So I just show you where the exact entry was. See, that's where obviously the wick came into the 50%. Price triggered me on a buy limit, and then obviously price ended up absolutely rocketing. Absolutely delicious. So if you're gonna not remember anything from this, remember two things. Number one, make sure that your technicals are in line with your fundamentals. Number one, if you don't understand fundamentals and you would like to understand how to trade fundamentals, or you'd like to use fundamentals to aid your trading, feel free to send me a DM on my Instagram, which I'll put somewhere on the bottom of this. So with that being said, I hope you guys got a lot of value from this. Any questions, feel free to ask in the comments. Any requests for future videos, make sure to ask me in the comments. Also, the bread room is officially open. So anyone that wants to work with me personally, send me a DM on Instagram. You'll be able to find my Instagram probably attached to this YouTube video as well. I'm still getting used to how YouTube works and that, so you're gonna have to bear with me. But like I said, if you want me to go through anything in particular, make sure to hit me in the comments. Make sure to like, comment, and subscribe on this video as well. And most importantly, make sure to keep your head on that bread. Peace.
You find your stop losses are tighter as well with
With what with indices?
yeah.
Yeah, because a lot of the time. Oh, there we go.
Here we go.
There we go. So now set my buy limit at 23076.53, and then stop loss. Stop loss will be 23061. 061.87. It's five, isn't it? Yeah.
26.
Yeah. So let's see, man. So I got my limit there now. 5.3 is it? Yeah, 5.3. 061. Oh, it's 1.87. Yeah, flat. Strong.
So that's on mine. I'm just looking at the what have I done with it? Oh, there we go.
Okay, cool. Yeah, so yeah, bro. But hopefully we can get that little Wednesday entry. It's been nice as well because like even if you look at at Asia range, bro, Asia got manipulated this morning as well, or this afternoon rather, after stock exchange open, without breaking its low. So we've actually wiped out, taken our Asian range. Asia usually sees the low of like usually that is the when you see Asian manipulation to the downside, it's usually low of the day. That's what I'm saying. So we've also seen that as well. So if this does come to entry, bro, and you know, and it triggers, then yeah, we've got quite a way up to go, bro. Do you know what I mean?
Yeah.
So yeah, see, man. Let us see.